Hello traders and welcome to the London Forex Broadsheet's daily wrap of the markets for Thursday, October 16th. The euro fell 40 pips during the overnight session after gaining 50 pips during the Asian session. During the European session, the euro moved along the LFB S1 at 1.3375, unwilling to significantly move in either direction. Currently, the euro is starting to show signs of weakness, as it is speculated the euro area economy will recover after the US economy. Once in New York, the pair traded in a tight 70 pip range. The euro can be seen here working its way into a descending triangle on the 4-hour chart. Resistance has been found many times along the trend line, which goes back to mid-September. This type of formation tends to break to the horizontal line. The pound followed yesterday's pattern and advanced against the dollar, despite other European pairs falling against the greenback. It is also worth mentioning that yesterday, after the US session opened, the pound tumbled much more than its European counterparts. During the overnight session, the pound rose as much as 200 pips, but traded in a tight range in New York. The sterling has been having a hard time lately in finding any trending direction. After the fall yesterday in afternoon trading, the pair has worked itself sideways for a majority of the day, trapped between 1.7350 and 1.7160. The Aussie posted impressive gains during the overnight session, even though the dollar strengthened against most of the other major currencies, especially the euro and the Swiss franc. During European trading, the Aussie was content to hug the pivot point, despite breaking above that level during Asian trading. The pair range traded in New York, but looked to close near session highs. The Aussie is still trading within the confines of the descending triangle seen here. If it were to break out to the upside, besides finding resistance at the high of the week, the pair will also have a hard time getting through 0.7360. The pair has two major levels of support also seen on this chart at 0.6490 and 0.6320. The CAD again has strong moves during the overnight session as the trading range reached 170 pips. Lately, the CAD has posted impressive moves overnight during the Asian and European trading sessions, even though historically the pair remains dormant during this period. The pair traded within a tight range in New York even as oil declined sharply. In economic news, Statistics Canada reported that manufacturers had a notable pullback in sales in August, following 4 consecutive monthly increases. Sales decreased 3.7% to $52 billion, erasing most of the gains from the previous 2 months. The loonie had a down day overall as price was rejected in the 1.2000 area. The pair still has strong support from the trend line on which to fall back on. However, this formation tends to break to the horizontal line. If a solid break comes of 1.2130, a lot of buy orders could be stacked up in that area. The Swissy posted some very strong gains during the early hours of the European session, strengthening as much as 180 pips and testing the LFB S3 at 1.1490. However, as the European session progressed, the Swissy gave back some of the gains and tested the 1.1400 area. The pair rose slowly in New York and looked to finish the day near session highs. In economic news, retail sales remained stable in August. The release number of 0.0% is lower than market expectations of 0.9%. The ZEW indicator for Switzerland, gauging analysts' economic expectations, tumbled to negative 91.1 in September from negative 44.4 1 month earlier. Only 2.2% of respondents expect an improvement in the current conditions over the next 6 months. The Swissy is another pair that has worked its way into an ascending triangle. The pair has relatively strong resistance in the 1.1485 area, and then above that at 1.1600. The RSI has gone flat near the 60 level, while volume picked up quite a bit today. The yen moved higher during the overnight session as US futures recovered from negative territory to trade positive. The yen rose 60 pips since the Asian session closed, touching the neutral pivot point at 100.50. The Nikkei posted strong declines overnight, but has not had the positive effect on Japanese yen as may have been expected. The pair was rising towards the close of the session as equity markets found a bit of support. The yen is seen here in a pennant formation with resistance seen in the 101.70 area and support in the 99.50 area. The RSI has been bouncing like a pinball, as has the price, back and forth. In Asian equities, the Nikkei tumbled 1,089 points, or 11.41% to 8458. This is the biggest decline since 1987. The Australian S&P ASX tumbled 286 points, or 6.67%, to close at 4,013. In European stocks, the German DAX slipped 238 points, or 4.91%, to close at 4622, while the UK FTSE tumbled 218 points, or 5.35%, to close at 3861. On Wall Street, at the close of floor trading on the New York Stock Exchange, the Dow was at 8974 after gaining 396 points, or 4.62%. The S&P closed at 945, up 38 points, or 4.19%, while the Nasdaq finished trading at 1717 with a gain of 89 points, or 5.49%. Crude oil for November delivery was down 4.49% to close at $71 per barrel. Gold futures for December delivery were down 4.26% to close at $799 per ounce. Treasuries were sold as traders bought risk. The 2-year notes yield rose 8 basis points to 1.62%. While the yield on the 10-year note rose 1.5 basis points to 3.96%. Overall, the data released this morning pointed to one thing: the U.S. economy is in a recession. Industrial production fell to its lowest level in 34 years. Continuing unemployment claims stayed near a 5-year high, and the Philadelphia Fed report said manufacturing in the region was at its lowest point in the history of the survey. Also, the weekly oil inventory report said demand for gasoline fell 5.8% from the same period a year ago. Term estimate on retail sales showed the purchases declined 6.3% in the year to September. This concludes the London Forex Broadsheet's daily wrap of the markets. We appreciate you making us part of your trading day.
All contents of the LFB are for informational purposes only and should not be used as a replacement for research by an individual investor, trader, or licensed investment professional. Neither the LFB nor any of its affiliates shall be liable for any errors, omissions, or for any actions taken in response to the information contained herein. We hereby make no representations or warranties regarding the accuracy of any information contained in this broadcast or on our site. Forex market trading involves special risks and may not be suitable for everyone. Each investor or trader should assess their financial situation and risk tolerance before proceeding. Copyright 2007, LFB Services, LLC. All rights reserved.